Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec. On Monday, the 18th of May, we've got a pretty decent outlook for risk appetite this morning. It's come in the wake of a TV appearance from Fed Chair Jerome Powell, which he was talking about the US economy, obviously, and suggesting that unemployment rate could be sort of 20 to 25% at the moment, with GDP declining by perhaps as much as 20 to 30%. But broadly speaking, he was fairly sort of positive, I would say. The fact that he said that second half of the year, US could start to see a growth recovery, and also that the Fed had further room to manoeuvre if it was needed. So the markets have taken that as pretty much risk positive today. And you can see that through equities today, where there's a pretty decent run through European equities. You've got oil price, which is stronger. That oil price rebound is really interesting, actually. It's actually broken out on WTI above those April highs, which is really impressive. That on Brent crude, not quite there yet, but still looking decent for a recovery. We've seen a slight tick higher on Treasury yields, nothing too decisive. That 10-year sort of just hovering, really, similar to the 2-year. Nothing too decisive there, but you do have US futures which have recovered now. Across the cash indices, you are seeing these moves starting to form into top patterns, but not so much on the futures. We've seen the recovery in the last few days, which has been really impressive, actually. And sort of, at least for now, put to bed the prospect of a top pattern, which would complete below on a close below 27.70. Thereabouts on the futures. It was quite considerably above there now. So a decent reaction there on US futures, and that's certainly helped the European markets today. We've got on Forex, a slightly risk positive outlook with the yen the main underperformer. Dollar has been benefited from a slightly weaker euro, but broadly speaking, the commodity currencies are the outperformers today. Dollar index just still hovering just slightly above the 100 level. This big breakout on gold is really interesting. Multi-year highs on gold. I'll talk about the technical implications of that, but also look at this one below here, silver. Really impressive move that we've got on silver there, and you can see how this really translates on the relative basis. Gold, the yellow line, silver, this grey line here. What a move we've seen in silver in the last few sessions. Just enormous. And gold also performing well on that breakout. That's over the last month performance versus the dollar. So we've got some decent moves there on gold and silver. Now, in terms of data points today, nothing really until 3 o'clock this Arvo, where you've got the NAHB Housing Market Index. Let's have a look. Oh yeah, before that, Japanese GDP. Better than expected, slightly, although into recession for Japan. Now that NAHB is expected to improve actually to 33 in May. But yeah, it's not really that much of a closely looked at indicator. So my chart today is the Kiwi dollar. Now, I was sort of looking at this on Friday, thinking about how the fact that risk appetite has really suffered actually in the last week or so, reflected through the Kiwi, but also the Aussie dollar falling away, but Kiwi especially. This breakdown potentially on Kiwi is really at a critical level, this level of support, which is 59.10 to 59.20, has been a basis of support through April and into now May. So that is a crucial support, and that is a really, really important level, because if you start to close below that, that really does hint that the market is rolling over. It's already broken below this shallow uptrend channel. You've already got the sell signals coming through on the MACD lines. The stochastics are correctively configured. The RSI, well, it's back above it now, but sort of underneath 40 at one stage this morning. And yeah, it really is sort of on the brink, really. So it needs to hold this support, really important support. But it's also got this progressively developing downtrend on the Kiwi. And you've got this run of lower highs and lower lows on the hourly chart. The old support becomes new resistance. You've got 59.60 on the hourly chart. Those lows from Thursday become resistance. And again, around 60 big figure, I'll show you on that, is pretty much these around these old May lows as well. So old support becoming new resistance of the downtrend. Looks like that this one is still under pressure, despite the fact that we've had a tick higher in risk appetite today. Needs to really go above that reaction high from Friday, which is 60.15, and unless it does that, then you really are suggesting that I think the Kiwi is under mounting pressure. So with that in mind, I wish you good luck in your trading today. Click here to click here to subscribe to our webinars, but also you can click to watch our Trader Talks videos where we give you some top trading ideas.